Okay, welcome to the introduction course to management accounting or performance management. And in this class, we are going to be focusing on classification of costs. And I know before you got to this level of management accounting or performance management, you have done cost accounting. Management accounting is the extension of cost accounting. So there are some things that I believe you learn all those things in cost accounting before coming to management accounting. So here we want to focus on classification of cost. And under the classification of cost, we have three classifications. So the first one, cost can be classified based on nature. Then cost can also be classified based on function. Then also cost can also be classified based on how the cost behaves. So we have behavior. Now when it comes to the classification of cost as nature, what goes into it? So basically when you take cost that is being classified as nature, we are looking at, is the cost being direct or it is an indirect cost. Then we take the function of the cost, then we can have production cost and non-production cost. So the production costs are the costs that are involved in production, and the non-production, basically they are not involved in the production. So you have the non-production cost. Then also when we come to behavior, then the cost under behavior we have a cost classified as a variable cost, we have a fixed cost, semi-variable or semi-fixed cost, and we also have a step-fixed cost. So we have a variable cost, okay, so let's go into all these costs in details. A direct cost is a cost that we can trace to the production of a specific unit. You can trace that cost to the production of a specific unit. And when you take the indirect cost, is a cost that we cannot trace. So when, for example, when I'm producing a table, what are the costs that will be associated to that table? Any cost that I can trace conveniently to the production of one table, then that cost is a direct cost. Any cost that I cannot trace conveniently to the production of that table, but then we say that cost, it is an indirect cost. Then when we take cost classified as function, what are the functions? Under the function we have production and non-production. The production costs are the costs that are directly involved in the production of a unit of a commodity. All costs that are directly involved. Then the non-production cost, so the cost that will be directly involved, you are going to use material. So material cost is a production cost. Labor will be processing the material and be operating machines, so we have labor cost. Then we have other expenses that we will be incurring, which are directly involved in the production of that unit. Then we say all those costs are production costs. Any other cost that is not linked directly to the production, but we also incur those costs, they are non-production costs. For example, we have administration cost. Administration cost is a non-production cost. We have marketing and selling and distribution costs. All these costs, they are all non-production costs. Yeah, so when you take also cost classified as behavior, we have a variable cost, we have a fixed cost, semi-variable cost, and a step fixed cost. So when talking of variable cost is constant per unit, but differs or changes in total. So we are producing 1 unit, the variable cost of 1 unit will be constant, it will be the same. For example, let me take an example. If you are producing exercise book, when you are producing book and we want to produce 1, and that 1 is costing us $3 to produce, so that is the cost per 1. If we are producing 10, then the total will be the 3 times 10, which will give us $30. Then when we are producing, so this is just that's for 10. So when we are producing 20, the cost of 1 is 3, so times what? The total that we are producing, that will give us $60. So you can see here that the cost per 1 is the same, but in total it varies. So any cost that is constant per unit but varies in total, we say that is what? A variable cost. From your economics knowledge too, variable cost is also what? A marginal cost, the additional cost incurred as a result of producing additional units. So that's what I'll say about a variable cost. Then also let's take a fixed cost. So a fixed cost is a cost that is constant in total. A fixed cost is constant in total, but changes per unit. So a fixed cost, when you come to the total is the same, but when you take 1 unit, or you allocate that fixed cost to 1 unit, it changes based on the level of production. So for example, if we have a fixed cost, say rent, if you are producing, you are in manufacturing and you rented a warehouse. If you rented a warehouse, if your activity level, if the cost of the warehouse is, let me say, $10,000, if your activity level is 0, you do not produce anything, you will still incur the cost of what? That 10,000. But if we are producing two units and we want to allocate this 10,000 to the 2 units, that means 1 unit we are spending what? 5,000 on 1 unit, but in total it is what? 10,000. Then what happens if we are producing 10 units? You are producing 10 units. If you want to allocate this fixed cost to all the units, then we are going to be incurring 1,000 per unit. So here you can see that in total the fixed cost is the same, but when we come to per unit, so here we are here per unit. So per unit the fixed cost is changing. What happens if we are producing 50 units? So if our activity level increase to 50, how much fixed cost are we going to allocate? So the fixed cost per unit will be what? 200. The fixed cost per unit will be 200. So per unit is changing, but in total it remains the same. When it comes to the variable cost remains the same per unit, but changes in total based on the activity level. And when you're talking about the variable cost, you're going to be having material costs, which is direct material cost because it can be traced. Then we have direct labor cost. Then we have what? Direct expenses. These are basically the. You can also have a variable overhead, and this variable overhead, it is based on the level of activity. So even though it's an overhead, when your level of activity increase, this variable cost will increase, and if the level of activity or decrease also, the variable overhead will also decrease. So that's basically the variable cost and the fixed cost. Now let's move to semi-variable cost. If we are talking of semi-variable cost, that means part of the cost is a variable cost and part of it is a fixed cost. Part of the cost is a variable cost and part of it is what? A fixed cost. So when it comes like that, you must decouple it. You should be able to separate it into the fixed cost and also into what? The variable cost. And we are going to be using high and low methods to what? To separate the fixed component from the variable component. So we'll be doing this in the part 2 of our video. Now when it comes to step fixed cost, a step fixed cost depend on activity level. Even though we say fixed cost is constant in total, the step fixed cost depend on how the activity level is going. For example, when we are producing from 0 to 5,000 units and we need a warehouse to store this unit, and the warehouse is costing us $10,000. That means if we produce this unit or less, the warehouse that we are going to store it is costing us $10,000. Now if we produce more than this 5,000, for example, we produce above 5,000 units. If we produce more than 5,000 units, that means we need additional warehouse to store our finished goods. Maybe the additional warehouse that we are going to get is going to cost us 5,000. So this is a step fixed cost. A step fixed cost occurs when we are out of range. So if this is the range that we are producing, the production range is what? From 0 to 5,000, and the fixed cost that we are incurring is $10,000, and we decided to produce more than the 5,000. That means the warehouse that we are using cannot occupy the 5,000 again, so we must get additional warehouse. So our fixed cost, the rent, will increase. So in this case, we are incurring additional cost of what? 5,000 for the rent. So this is a step fixed cost. So anytime that we produce within this range, then the fixed cost will be what? 10,000. But when the production increase more than the range that we have here, then we must incur additional cost, which is what? 5,000 additional fixed cost. So this is how the step fixed cost behaves.